What's up, guys? Welcome back to another video and thank you for being here. Today we're going to talk about the intraday bias and how you determine it. A lot of people been asking me recently, how do I do my daily analysis or my daily bias for that day and all of that. And today I will show you a quick and easy method and a strategy and a concept that you can implement it in seconds, and it's the best thing ever happened in the market. And I'll show you how to use it, how to utilize it, and how to take a trade from it just in a second. But before we start, please drop a like on the video if you find it helpful and subscribe to the channel if you are not already yet. Lastly, I want to credit this concept to Dodgy DD because he's the one to create this kind of concept of the one setup for life or the news wick, or how to take a trade while the market is very hot and has high impact heavy news. So a lot of times when you go to the market and see that there is news or CPI or PPI or any heavy news in the market, a lot of times traders find these days to be very severe and they tend to ignore it and just walk away from it, while you can be banking on these moves and these news wicks. So the news wick is very simple. It's very simple concept and a very simple idea. It's basically what the news leave when it hits. So at 8:30, this is July 25th. On July 25th, we had what? GDP and unemployment claims. So when heavy news drops at 8:30, you need to mark out the news wick for the high and low if there is any. And when the market goes to one direction, you should be looking to take an opposite direction when and only when there's only a setup provided. If you don't have a setup, then there's no trade. So I'll go and walk with you through a bunch of example, guys. So let's go ahead and get started. So this is the next example, guys. This is July 16, which we had core retail sales at 8:30 again, which is a strong news and heavy news day. And we also, it left us a news wick, which is what we really love. So just going to quickly see what's going on the higher time frame. As you can see, bearish fair value gap. We touch it, go down, come here, turtle soup it, go down on the 15 minutes. So right here we have equal highs up here, kind of like an equal highs, but we have news wick, which is what we really should be focusing on the 15 minutes. Is pretty obvious. So your trade idea and your bias should be what? You should be bearish. So let's wait here for market open really quick. Let's see what market open does. Market open goes and we take on the equal highs up here and we give a inversion fair value gap setup. You can take your setup from here and target the news wick, which will give you $62 movement. Also, guys, want to mention that so market open and gives an inversion fair value gaps. I don't really recommend taking any trades around the market open because it tends to be very volatile and you will not be taking anything. And as you can see, the price goes and sweeps one more time. We're gonna still play price here, and I usually like to take inversion fair value gaps, so I am looking to maybe take any inversion fair value gaps after we violate it. So the price goes up and we go down. Nothing really is happening here, and let me see what is going on. So what is supporting the price up? What is supporting the price up is this inversion fair value gap. If we break it, absolutely we're going to this news wick. If we don't, then I shall wait. So the price goes still up again and we create a new bullish fair value gap. So if this fair value gap breaks, I should be looking to take that trade no matter what to the downside. So right here, $22, you can maybe make it to here since the price is moving too volatile, and you have the RR, my friend. It's 2.87 and $74 movement, and there you go. Once we basically destroy that inversion fair value gap, you can move stop loss to break even. So you can see we did not take it out, it's not broken yet, so maybe wait one more candle. So right here, so you should actually moving stop loss at break even at this point. You don't need to put any more risk on the table. So let me just put it here for our sake to see the full trade. And there you go, just plain price here, the price respecting this inversion fair value gap again, closing above it one time, destroying that and disrespecting it, and closing below this bullish fair value gap. So this could be another entry. So let's test it out, you know. So right here, and sorry for that, so right there, $40 move, and your stop loss should be break even once we take this low. Take out all the risk, and there you go, my friend. You just banked yourself the best trade of your life. This is the power of the news wick, guys. So you don't need to have a daily bias when you go to a day. Just have your perfect news wick marked out, and this should be the drawn liquidity. Will it work every single time? I'm not saying this is 100% win rate. I'm not saying it will work every time, but this has, like, I would say 80 to 90% a chance of working every single time, guys. I'm not gonna say it's 100%, but it has a higher win rate percentage if you actually take the right trade. And even if you don't get it from the first time, even if you like tried to take it from the first inversion fair value gap that shows up, it still kind of will work. Even if you lose, that's fine. Have another stab at it, because this will work. And you actually shouldn't be trading at market open at 8:30. So I don't know if you like to trade at market open. I don't know if this should be counted as a loss or not, but I would personally not trade at market open. So the first thing, guys, that you need to do is find a high impact news and see if that news will create wicks, mark it out, and see where we go from there. So let's go to another example, and I'll show you how to use it, just the same exact thing, and how to implement it. So here we are, guys, on another example. This is July 18th. What did we have on July 18th? We had unemployment claim. Usually, guys, unemployment claim, it's not really the best to trade this setup with, but look, man, if you have a high impact news and that news lift a wick, that's your drawn liquidity for this intraday. Don't go and distract yourself with like daily bias and daily analysis, and go to the 4 hours and go to the weekly and all of that. And at the end of the day, you just get the direction correct, but you can't take the actual trade, and you lose for that day. But at the end of the day, or like in the PM session, the price starts to go to your drawn liquidity. You're actually getting the analysis right, but you're not getting the intraday bias right, the trend for that day, or the drawn liquidity for that short time period. So if you are a day trader, or you're looking to take a small trades for between like $10 move to up to $70 move, or sometimes $100 move, be my guest. So starting with this trade day, we had 8:30 news, which was a unemployment claim. So we're gonna go ahead and mark this as a news wick, and we'll see if we'll get a setup towards it. So this is the idea, guys. If we can get a setup towards it, 8:30 where? Right here, 8:30, and we almost taking it out. Now, it's not really a good thing for us to trade around 8:30. So you see in this example, it worked, and we took out the news wick. So I'll actually, instead of going through and trying to force a trade, actually there was a trade pre-market right here. This inversion fair value gap, and this 8:30 respected it to the tick, but I'm not telling you to trade it. So let's actually go to a different example, but this, it's a good thing and it's a cool thing to see the kind of like the knowledge or the idea working out, the concept itself of taking out that news wick. So let me try to find a different day, and we'll go through it, guys. So here's the next example, guys. July 25th. What did we have? July 25th, we had unemployment claim and GDP at 8:30. So right off the bat, I see a news wick. What are we gonna do? Mark it out. Here is our news wick, and this is the intraday draw on liquidity. You should not be doing any analysis or anything for news wick. You should not be doing any analysis or any higher time frame analysis. This should be your draw on liquidity for that day, guys, if you are trading intraday. So let's play out market open here, and this is our market open. No, not yet. Where's market open? Should be this candle. Yep, 8:30, or I mean 9:30. So right here, 8:30 is market open. And this price or this IFG is the one holding the price up. So if you want, we just broke it. You should be taking your trade from here and targeting this low, $110. Your stop loss should be up here. If you want, again, we are not trading around market open. You cannot be trading around market open. So I'm not going to do that, because this is gambling, because the market can open, manipulate up or down, or will do whatever it wants, and you end up to be wrong. But this is how it works, guys. This is supposedly how it should be doing, because the market opened and we came, the next candle destroyed that inversion fair value gap. That means we are going lower to where? To our draw on liquidity for that day, the news wick. But as we know, we're not trading around market open, so therefore I cannot be taking that trade. So continue, the market dumps. We also still have these bullish fair value gaps, so we might react from it. I don't know. Anyways, I am not taking any trades around market open. And as you can see here, the market goes up a little bit to retrace to where? To this unfilled bearish fair value gaps. And we have other fair value gap. Yeah, I think this is the only fair value gap in this leg. So you can be waiting for a trade to come out here, and you can just take it blindly if you want, and just take it to this news wick. Or if you want to wait for an actual setup like an order block, it should be right here. If you're waiting for inversion fair value gap just like me, you can just wait a little bit more. And as you can see, the market draws and retrace to that bearish fair value gap. You should be taking your trade from here if you want it to be blindly. I myself do not recommend that, and I wait for another confluence to appear. I know where the market wants to draw to, but I am waiting for an actual setup to appear. And I like to take inversion, so here should be my trade, and this should be my target. And we just disrespected that bullish fair value gap, and that's what I'm looking for. And as you can see, the market went all the way up here to retrace and respected that what? That inversion fair value gap that I just broke. And therefore, this is our trade. Retraces all the way up here and reacted all the way down. After taking this low, your risk should be taking off. And we just took it. We just took that low. So now your stop loss should be at break even. Maybe the market would have taken you out break even. It's up to you if you want to move it to break even or not, but this should be the draw on liquidity and the price target for that day. And as you can see, it played out beautifully. It's a little bit choppy. As you guys know, I'm not gonna come here and pick the best trades out of all the setups and sugarcoat stuff. This is how trading is very, very, very difficult and hard, and it's not easy as everyone on YouTube making it seems. You're going to have break-evens a lot. You're gonna have losing trades a lot, and I'll show you right here in a second just the exact strategy not working. So maybe you'll take L's on this day. So on the 12th, on Friday you had PPI. So let's see if we had a wick or not, right? So right here, Friday the 12th, what do we have? We have a news wick. Someone else will just watch that video and be like, oh, I have the holy grail. No, you don't. News wick, right? The actual thing is here that we never actually had kind of like a setup towards it, which you will not lose that day, but a lot of people might force a trade and not be able to go through all of this and see all of this and then take a trade and lose, or whatever, how you want to do it. As you can see, I don't see, so market open at 8:30 right here. I don't see any bearish fair value gaps, or I mean any bearish IFVGs. You see this one? I don't like it. Why? Because it's not singular. I see, what else? I don't see anything else here. Here it's 11 o'clock a.m. I'm technically not trading after 11, so I shouldn't be watching anything else. You see these shorts are working a little bit, but this is just a retracement to the downside and then expansion to the upside. And as you can see, the PM session, we just dumped and took out lunch low. You can just be taking or looking for a short still, but this news week did not hit that day. So this is one of the days that you will see this concept is not working, but it will work like maybe, let's say, 8 out of 10 times or 7 out of 10 times. So you can be utilizing that knowledge and that concept into getting and not worrying about all of these like daily buys or high time frame analysis or weekly or monthly. You don't need to go through all of that. If you're just trading like $10 to, let's say, $100 move, and you're just looking for an intraday trade that you get in and get out in the next hour, you should be looking for the 1 hour, the 15 minutes analysis, and just a small time frame, so you can get a short intraday buys to that day. You cannot be looking to like predict what's the next weekly candle and then want to take a trade that day. You're going to lose half of the times, because yes, you are getting maybe the direction of the market correct, but you're not getting the intraday sentiment right. You're not getting the intraday bias right. And that's it for today's video, guys. If you enjoyed today's video, please don't forget to leave a like on this video and subscribe to the channel if you are new here. And thank you all so much for watching. I will see you in the next one. Peace.